Hey traders, Nick Shaheen here looking at Netflix. This is a short-term chart, 5-minute. First of all, today is October 1st, a great day for the stock market until a few minutes after the open when we got the ISM. 30 minutes into the session, flipped it, the ISM Manufacturing Index, and it was terrible. Worst in 10 years. So the market puked it and went from an up day to a very negative day, and the VIX spiked 20%, maybe more, from bottom to high. Anyway, so Netflix, on the other hand, closed green, and I think it had a headline of sorts: Ryan Reynolds show, blah blah blah. So you can see this is the October trade. Netflix spiked, and it showed tremendous upside potential, like not potential. Risk appetite on a bad day, which makes begs the question: how far would it have gone if there was an up day in the market? Okay, so having said that, how do I trade Netflix? First of all, this actual whoosh up, I wouldn't chase it right here because it tends to be choppy. Every move up or down gets reversed, and I don't like to chase headlines. So how does this change the fundamentals for Netflix having one extra good show or person? It doesn't. It just continues the thesis. So the thesis on Netflix is that the global growth, that was the selling point, and that was when it was going to $1 billion. And exaggeration, that's when it was challenging, or people were talking $400 a share, $500 a share. It was all based on the fact, look at what it did in the US, how far can it go overseas? And that is the big thesis until you take that out. Last report was terrible, so this report is very important. I'm still looking at a short-term chart here, but I wanted to share my thoughts on the fundamentals. I am not an expert on Netflix. I don't have a position in Netflix. I have traded right and wrong, traded it right and wrong. But it's undeniable, the thesis, that everybody wants the global growth to be there. If it's not there, they're going to punish it very, very hard. Now, how do they get the global growth? How did they succeed in the US is via content, and they spend billions on it, 18 to 20 billion. I can't get a straight answer, but it's definitely over 18 billion per year. 18 billion per year. That to me is just astonishing. So the good news is that they have an ace to bring the global, the expansion, bring the attention, the eyeballs. But I don't think it works the same overseas. Do they have a Spanish version of Stranger Things, for example? I don't know. I'm just using this as an example. So it's unproven that the growth will be sustainable overseas like it was here. So this next earnings report is very, very dangerous for Netflix. Okay, so short term, I don't know, from just this chart time frame, it's hard to answer. I can tell you one thing, that it's coming back into a prior pivot point. So in theory, this should be some support here, from here to here, so 268. If the whole market falls the next day, tomorrow, and day after, I don't know if they can sustain the rally. But if I'm long, this is where I don't decide to get out yet. I wait to see the verdict. Where do I get out? It all depends on personal preference. The first bug out line that sticks out to me is 268.60-ish. Below that, then it becomes a little iffy. Some people might pick this zone right here because of, they say this was an overshoot, this was an overshoot. So this is more a better representation of the neckline. So 267.60. Other people might say, okay, it's the point of control for this period of time, which is not too many days. So 266. So all depends on the time frame. For me, I'm going to revert to, let's take a 2-hour chart, maybe 15. So that was a 5-minute chart. This is a 15-minute chart. Okay, now I get clarity. I'm going to mark it up a little bit to speak from a trading perspective. Now, I just addressed my thoughts on the fundamentals, which could be worth less than zero for you, the expert on it. I'm not sure. Don't care. This is my thoughts. So one could argue that it has been in a breakout from here with upside potential even higher than where it is. But this, to me, is where I would probably try to chase it. But really, I should wait for this level right there. I'll find it out on the chart in a little bit. Why? Because this was the last mega fail. By mega, I put that in quotes. This is a 15-minute chart. So every candle is 15 minutes. So it's mega for this period of time. So on a chart, I would probably, in fact, I'm going to do it right now. I'm going to put a trade alert. Not a trade alert, an alert. Wake me up when Netflix gets here. Then I could have put it here, but I don't want to be faked out, and it has had a lot of fake outs. Look at these points. All these were fake outs, and they're all close to this level. So clearly this zone is pivotal. What zone? I'm going to draw a box around it. How about here? Thanks for the construction outside. I love it. Okay, so this is a pivot zone. So by definition now there, onus is on the bulls to say, okay, we can use this zone as support so we can build and finish this breakout. Okay, now this is a 30-minute. Let's go to 60. Can we get a little smarter? All right, we can get smarter. On the 60, I had, I'm going to delete this. This is too short term. Okay, so right here I had a pinpoint. I shared a chart with friends about it being tight and a move coming, and I said I know two levels that I should watch, this one and that one. I don't know which one is going to come, but I know what's going to happen once one of them is breached. It took a while for them to breach, and once this is lost, this one, if I extend it, that would be right here. It's almost exactly where I drew it, and I drew it days before. This is September 9th. Sorry, earlier than that, 5th. I drew that. It took all the way to here, the 19th, for it to fall apart. But once they lost it, convincingly, they tried twice to hold it. We knew that the downside should be at least that. And for me, it's never the actual technical, like if I have a technician would say, well, you didn't draw it too low enough. It should have been lower. Maybe so. But I usually look left, and I usually have a reason why I stop here. In this case, here we are, back at the line that I drew, whether by coincidence or by me being a little clairvoyant on the levels that matter. Here we are at this level right here. So it puts some validity to my level tracking, so I get a little more confidence in what my opinion. So this is a 2-hour chart, doesn't give me any more. Okay, so let's go to a daily. All right, so this is the daily. This is that same box I just drew, not seeing this. So now I know that this box is important. In fact, if I extend it left, it marks the bottom-ish zone of the correction last year. Yes, the Christmas crash was deeper, but you know, on panic, we overshoot up and down. So I could consider this as an overshoot, but keep that conversation in mind. Keep that target in mind, that level. Okay, so from a perspective of where did it bounce from? It bounced exactly from this line right here. So these levels come back to play. There's memories have, stock markets, charts have memories. People say, you know, short memory traders. I disagree. The charts have really good memories, especially that now we have more machines trading than humans. That's what they use. Garbage in, garbage out. They program at X do this, at Y do that. And if they come back to that price, they act again. And so the levels are important. So what do I make of any higher time frame? So I'm going to go to a weekly chart. So this shows Netflix from a weekly perspective. So year to date, they're still flat, maybe down 3%. Which means that they were really happy earlier. So they gave away, I think last time I remember seeing it was up 40-45% on the year. They gave it all back and then some. So they shed a lot of froth. But here's the rub on this. They're going into earnings. I think middle of the month in October, they report earnings. God help them if they have a crappy story to tell like they did last time here. If they miss on their projections for new signups, or if they say going forward it's going to not be as happy as we thought it was going to be, and or if they say on top of it they're going to say we upped our spending limit, or we're going to dial back because we're not getting the big bang for the buck. I don't know how people will take that. But the first two problems, like growth, global growth, and missing the forward expectations, guidance, so to speak, oh my goodness, this one will open the floodgates. I think I just put this alarm not too long ago. This kind of like to wake me up and say, hey, look at this one. Is this going to come next? Because if this goes, I think 180 could be in play. So I'm not calling for 180, so don't hate on me. I'm just saying if this, then that. So if I wanted to go long Netflix into the earnings, I'm playing with fire because it's the short-term reaction is coin flip. I don't know what they're going to say, and I don't know how the markets are going to react to it. So even if I'm very, very smart in knowing what the P&L is going to look like, I don't know what they're going to guide. So that's the rub. What's going forward? Markets almost don't care about what happened. They want to hear what's going to happen per your opinion. So, and lately, Reed Hastings, not lately, historically, he's been very flippant about that, and he says things like, I'm competing with sleep, like meaning he has no competitors. And I'm thinking to myself, man, you got the biggest companies on the planet just running after you. And this time he has actual dates where they're all going to show up on his front door. And now if he doesn't change his tune and say, yeah, they're here, and here's my plan, and here's why I don't really care, I think there's plenty of room for everybody to play. I don't think Disney is a game changer. People will have Disney and will have Netflix. I don't think Apple is as good a foe yet. Yeah, they have deep pockets, but I don't think they can spend a lot on a $5 per family income stream unless they plan on jacking that bad boy up and at least making it $5 per person. So we shall see on that front. So the real competitor is Disney for now, and actually more so than Disney, the collection of all the other channels that have gone online. I can't tell you, I mean, I used to watch fighting on regular TV, and now it's behind closed doors. It's ESPN Plus with the UFC or whatever. So I ditched them. I was like, you know what? You want to take it away from my cable bill? Until I cancel my cable, I'm not going to pay you to. So it all depends on the perspective. But one thing is really clear is the earnings report. It's going to be okay. So I'm not calling for this to happen, but if it does happen, there's tremendous downside. So if I wanted to short Netflix with a lottery ticket, there are plenty of put spreads I can buy for November, maybe calendars, or even better yet, diagonals, because with the VIX being so high and earnings into, maybe it gets captured with the October, if not the 1 week thereafter. I think the 16th or 17th. I have to make sure I capture I sell the week of the event, and this way, because if I sell it at a place that doesn't come to fruition, then I maximize my profit from selling that leg. But I'd be long another one out longer in time, like say November. So then I capture that downside move. So I think that this orange line that I drew is very important to hold. But if this one fails, which is I'm going to eyeball somewhere around 230, I'll go check it quickly changes the conversation from how far can it go up to how low can it go. And I can see that there was a line here, and a line that I actually drew here from a long time, and a line here. So there's a cluster of lines, plateaus. Pick and choose yours. But I think a big headline will probably slice it down to 180 to stop somewhere in between those plateaus. I'm not calling for it. I'm saying this is where the risk is if I'm long Netflix, which I'm not. But if I wanted to short it, a put spread, a put calendar, a put diagonal will probably be the way to do it. I wouldn't be so brave as to short it with call spreads, selling them, or shorting the stock outright, because markets are stupid and they'll do stupid things to punish a lot of people. So look at this. Last time it was here, look at this rally. And that was, of course, the whole market rally. But we're kind of in the same boat right now, only with the Fed on our side. So we shall see. This week is pivotal because we have a jobs number too, so I'm including that in there. Headlines, we have 2 or 3 ISM reports to come this week, so they're going to be like under the microscope. And if they're bad too, so this is where bad news, yeah, they're bad now, but they probably become good news. Worst case scenario is if we get bad ISMs and really good labor that on Friday, the employment numbers from the Fed, from the federal government, basically how many people are employed. Because if we get new jobs created like in the 250 or 300,000 with crappy ISM numbers, that's the worst case scenario, because A, that ties the Fed's hands. They can't raise rates if they have wage inflation, because that's one of their mandates. And we have crappy, deteriorating economic conditions even in the US, so we're like Europe. That would be terrible. So temporarily terrible until somebody tweets something nice about China. So this is where we stand. Netflix is vulnerable. I'm going to go back to the daily chart. And this is not a clear place to start chasing it. I put a timeline here, the reminder to alert, to tell me, hey, if they beat this candle right here, which is, God, my eyes are going away, 273.5-ish, then I should pay attention to it. They might be headed to the neckline from which they fell apart, this neckline. So they might be headed to 285. I know it seems outrageous right now. So what do I do with Netflix? Right now, nothing, unless I want to gamble on up or down. So flip your coin and bet up or down, or wait for the breach of this or that. If they breach this, it's going a lot lower. If they breach that, they're going to go to the last accident scene. Big gap up here, but not every gap gets filled. So, but if they have a great story to tell, they're going to rocket to the moon. But look at this, man. This was on conviction. Gaps on bad news are hard to close, in my opinion, unless you offset the bad news. So yes, I'm technically speaking, but I also have some fundamentals to pay attention to. So here's the last reaction on earnings. I'm trying to see what have been the reactions. This was positive. This was definitely negative. This was negative. This was negative. So they're liking to, this was negative. So they're liking the fact that they like to sell the earnings on Netflix. So pay attention to that stuff too. But for now, my playbook, if I were trading Netflix actively, would be to watch these 2 lines on the daily chart. I'm sure there are other levels that one can chase on the smaller time frames, like this one right here, 272.2 versus this one right here. This one is a moving target, but I can draw it around 268.3, 268.3. This one as support at 265 for point of control type of a deal. Somebody can put it here at 264. 2 proven support. So if I were selling put spreads short term, I'd probably hide behind those.